record this, and now we are ready.
Hey, Chris, real quick, this is Bruce Clark at Digital Charlotte, Queens Night School of Communication. I had an updated invitation. I have them both open, both GoToMeetings, and one of them hasn't started yet, so I'm not sure if anybody else might be experiencing a similar dual invitation challenge.
Ah.
I'll fix that right now.
Katie, are you able to look into that while we get started?
Yep, working on it.
Great. Todd, were you or Deb going to introduce it?
Todd here, and yes, I'm happy to say good afternoon or morning, depending on where you are, and welcome to today's Next Century Cities member call. My name is Todd O'Boyle, and I'm the Deputy Director of Next Century Cities. Really excited to be a part of this conversation about how communities and financial partners can leverage community reinvestment. In a former life, I was an academic and spent a long time on CRA issues. So this webinar is of particular interest to me. A few housekeeping details. We ask everyone to remain on mute so that we can reduce the impact of ambient noise. If you have questions, we hope you will, please type them in the chat box located on the bottom right-hand side of your screen. You can send them to all or just the organizers, and we'll be sure to address them during call. As Katie mentioned, the webinar is being recorded and shared on our resource page should you want to refer back to it or share it with others. So let's get right to it. Policy Director Chris Mitchell will be moderating the conversation, and I'm going to turn it over to him to introduce our all-star panelists. Chris, take it away.
Thank you. So we have 3 panelists that will be joining us today. I'd like to just say that we do understand that you, the folks that are joining us, are not banking regulator experts. You may have a number of questions. This is a pretty complex topic, and we're going to do the best we can to make sure that we're not using too many abbreviations or doing anything that's too confusing, but we have a comment feature in the GoToMeeting software, and I encourage you, if you have any questions, to post a comment. You can send it to organizers. Katie, if you get any of those and want to break in, you should feel free. Or you can post a comment to everyone, and we'll try to address it. And this is the best way that you can, during our early discussion, more clarifying questions perhaps. And then as we get into it, more substantive questions will be welcomed as we have more of a opportunity to welcome the participation of the audience. Now, I want to start by introducing Tim Herwig, a District Community Affairs Officer in Chicago. He's with the Office of the Controller of the Currency. Tim, do you want to spend a few minutes introducing yourself to folks on the call?
Yeah. I'm sorry, Chris. Do you want me to begin with my my brief comments on the subject?
Yes, please go ahead.
A little bit about.
Okay, yeah, if you can just take a few minutes, spend a few minutes, a brief sense of who you are, and then the comments that you had prepared for us. And just so people are aware, Tim's going to give a very short discussion. He has a lot to share. Mark has a lot to share, and I know Jordana has a lot to share. So we're going to try and do most of it in a discussion format, but we're starting with some brief comments from each person. So please, Tim, go ahead.
All the regulatory agencies have community affairs or community development groups that operate within them. With the Fed, that has monetary policy responsibilities, their mission and purpose is notably broader than the CRA, which is part of all of our work. The FDIC does deposit insurance, and so they have somewhat of a broader take as well. But the OCC, my agency, is of the 3 the one singly focused bank regulator, and so my work is directly involved with CRA and community development, communities, nonprofit organizations, and I focus on the Midwest. So I'll begin. I'd like to begin with the usual disclaimer. The comments I'm about to make are my own and do not necessarily represent official positions of the Office of the Comptroller of the Currency. I'd like to share some remarks on the role of CRA and the decisions made by banks to finance community and economic development in their communities. I'd also like to comment on the role of the Public Welfare Investment Authority, or the role the Public Welfare Investment Authority plays in equity investments a bank can make in support of broadband networks, either municipally owned, developed by rural electric or telephone cooperatives, or other local, regional, or national telecoms. Debt financing of broadband enterprises that have a primary purpose of community development, as defined in the CRA, or the Community Reinvestment Act, has always been an option to banks seeking to finance economic development and therefore qualified activity under the CRA. The addition of investments in broadband infrastructure as an example of a qualified community development investment is new and opens the door, as it were, for banks and their regulators to more intentionally consider such investments under the CRA. The authority granted a bank to invest in a broadband network is called the Public Welfare Investment Authority. So in order to make qualified investments into the CRA, banks have to use that authority, which is an exception to the National Bank Act that enables banks to invest in non-bank community and economic development entities and projects that promote, under this law, the public welfare, which is largely synonymous with community development under the Community Reinvestment Act, or the CRA. I go into detail on this in my slides that are available to you on the conference website. Though the addition of investments in broadband infrastructure to the CRA, though the addition of investments in broadband infrastructure in the CRA Qs and As, these are the question and answers which practitioners of CRA use to interpret the regulation, will primarily affect the community development activity of banks with assets in excess of $1 billion. Banks with less than approximately $1 billion in assets will not have community development obligations under the reg, and so would not be motivated by the reg to invest or loan to a broadband enterprise. Though that may be the case, all banks may exercise their option to invest in public welfare activity under the Public Welfare Investment Authority. So all banks have PWI, and they can exercise that to make an equity investment in a broadband infrastructure project, regardless of the size of the bank. Public welfare investments must serve low and moderate income individuals, low and moderate income areas targeted for redevelopment by a government agency, or that would receive consideration under the CRA as a qualified investment. And community services to low and moderate people, provide financing to small businesses or small farms. Some broadband networks would be considered small businesses, depending on their size, or have the effect of revitalizing or stabilizing designated areas, often experiencing income and economic distress. Financing broadband infrastructure poses challenges to the application of the Public Welfare Investment Authority and for community development consideration of equity investments under the CRA. The primary challenge is that infrastructure development is often for general purposes and is not often targeted to particular income demographics, which is key to getting consideration under CRA and the use of the Public Welfare Investment Authority. So the application of the PWI authority and consideration under the CRA for financing broadband infrastructure pose challenges in metropolitan areas or urban cores where population densities are great and census tracts whose demographics range from low to upper income may be in close proximity to each other. This is less of an issue in rural areas. So and finally, PWI and CRA may play a role in encouraging banks to invest or lend in support of broadband infrastructure in your cities and counties, but only if the activities serving your community qualify under the two laws. Thank you.
So we're going to move on to our next panelist, Mark Erickson, who has been presenting with us in the past about a very interesting approach that he really helped to pioneer, although he'll very happily talk more about the other folks that he worked with on it, in South Central Minnesota and farm country. Mark has very specific experience with being one of the few communities that has worked with banks that were taking advantage of these opportunities, and so can bring some real practical on-the-ground advice from an outsider. So Mark, please introduce yourself and just spend a few minutes letting us know what you think is important before we launch into the discussion.
All right, thanks, Chris. My name is Mark Erickson. I'm the EDA director, the Economic Development Authority director in a very small rural town of 1,400 people, about an hour southwest of the Twin Cities. I'm involved with a 10-city fiber to the home and fiber to the farm project in about a 900 square mile area. The smallest town's about 400, the largest is 2,300 of the 10 towns. And we were helped by a visionary, I think you could say, banker in one of our communities who approached the OCC and Tim Herwig and said, you know, we think these broadband networks are important for our declining rural communities.
Muted.
We would like to not only make a loan to the enterprise, an interest-bearing loan, but we would like to make an equity investment, which is something that really has never been done. And an equity investment in our model, which is a cooperative, means that there may not be any return on that investment for 5 years or 6 years or 7 years or 8 years. So they just put funds up and wait for good things to happen, and I think that they will. And that's important for us for two reasons. One, it's some money that's put into the kitty to help us build this network, but two, it signaled to the community and the area banks that this was a legitimate effort, a legitimate project, and that they were willing to put not only loan money in, but equity money in. And I think it's an important development in this process. Our biggest issue was not convincing people that they should do this or that the cities should invest and pledge some of their tax dollars. It was finding the private financing, putting that model together. And I really believe that Tim Herwig's efforts at the OCC to get this equity investment ruling made has helped us a lot.
Great. Thank you, Mark. And I think that, you know, for people who aren't aware, Mark spent 6 years, probably more, possibly, working on this effort. And so when he talks about the importance of having that seal of approval, that really was quite important given all the efforts they put into it.
Yeah, go ahead. That's fine. I'll come back later.
Great. We also have joining us Jordana Barton. Jordana, are you able to speak now? I want to make sure you have a microphone that works.
Can you hear me?
Yes, you sound great. So I'll introduce you briefly. Jordana Barton is someone that is really, I think, a little bit new to this, but has written a wonderful publication called Closing the Digital Divide, a Framework for Meeting CRA Obligations, which is something that I think a lot of you should take a look at. We'll have a link in the email that follows this call. I believe we've already shared it with you. But she is the Senior Advisor in Community Development for the Federal Reserve Bank of Dallas, and really has a history in working with banks and can bring a perspective that I think will be helpful in helping the folks that are on the call to have a sense of why you might approach a bank and what you might say if you're able to structure a conversation with them. But with that, Jordana, please offer your opening comments.
Yeah, thank you. So the publication, thank you for sharing it with the group after this call. That'll be fantastic. So the example that Tim and Mark have given is a great example of supporting broadband infrastructure. one of the things I do in the publication is talk about how the lack of broadband or the digital divide impacts low and moderate income communities, and just what, right, the why and the how of how banks can have an impact on broadband infrastructure, as well as the three legs of the stool, right? The broadband access, the computer access and affordability piece, and the training and technical assistance. So I go through kind of the rationale, and then the new Q&As that came out in July that name broadband as an essential infrastructure and an investment under CRA. And also the new Q&As talk about the CRA service test. So in addition to being able to make a loan or equity investment in broadband infrastructure, banks can contribute and participate under the CRA service test, and that they should show evidence that there are alternative delivery systems like online banking and mobile banking using financial technology are being adopted and are effective. So I talk about the new Q&As in terms of both investing in broadband as well as alternative delivery systems. And so it's kind of the publication is kind of the how-to for the new Q&As. The new Q&As also talk about innovation and responsiveness to the community. So since we're talking to a lot of people involved in local governments, we know how critical local governments are the creation of broadband in low-income communities. And so when a city makes it part of their economic development plan, digital inclusion, and has a whole plan around that, that helps CRA bankers, because they can demonstrate, right, to the regulators that they're being responsive to the needs of their community, because it has been identified as an area of investment. So that is becomes very critical, and they can show innovation because they can invest in the three legs of the stool. If their community, I have a chart that kind of shows the three legs of the stool, and broadband, the kind of infrastructure investment that we're talking about, that Mark and Tim have given as an example, that's one very critical part, right? It's very important because you can't go forth with digital inclusion programs without having access for people. So banks can show innovation by investing in the three legs of the stool, and lending, service, and investment. So they can make a loan or investment. They can give grants for digital inclusion programs, which may include, a lot of the great ones include workforce development, which is also an important area of CRA. Access to financial services, financial literacy is often included. So I give them resources for connecting with community-based organizations, local governments, and resources to be able to invest in the broader, right, the three legs of the stool of broadband adoption. So thank you.
Thank you, Jordana. As someone who's worked within banks, I think a lot of times banks are most interested in making investments that will result in more money for them ultimately to be, profitable businesses. Can you just briefly give us a sense of, aside from altruism, perhaps, how the CRA, in particular, for people who really don't know much about the CRA, for instance, why do banks care about making these kinds of investments?
Yeah, and I suppose that's for me, right, Jordana? Yeah,
I'd like to start with you, and then we'll open it to anyone else.
Yeah, well, that's a great question. And CRA banking is just good business. When banks are doing affordable housing developments, for example, or the investment in broadband infrastructure, these are just good loans. They're able to work with local governments. They're able to work with local co-ops and nonprofits to make these loans. They can do new market tax credit loans too, as I discussed in the paper. That the Treasury has named broadband as one of the areas for investment with the new market tax credit. So this is just good business. When I was a CRA banker for a major national bank, and it was during the Great Recession, I was mobilizing and working with commercial banking, small business banking, because these were good deals, and we were getting the best architects for our, investments and so forth. Banks generally understand that it's not just we have special tools, right, with patient capital and the kinds of financial tools that we create under community development, like the Public Welfare Investment Authority example we're given, but it is good business, and it's meant to be, right? CRA is not about not doing good business and not being safe and sound. It's quite frankly the opposite, right? It's just developing better products, more products that are actually responsive to economic development needs of communities and wealth and asset building in low-income communities.
Tim, I'm curious if you'd like to weigh in on that in terms of why banks are motivated and why they might see this as something that they want to do.
Well, I think when it comes to, as I mentioned earlier, I think the larger national and larger regional banks will certainly be motivated by undertaking activities that would earn them consideration as community development activities, investment, lending, or service activities, as Jordana mentioned, under the CRA. But that's less true for small banks who may not have those obligations to meet under the CRA, and so are motivated. Motivated differently. I think with the smaller banks, an excellent way to begin is just to appeal to their historic connection to the economic welfare of the communities they serve. There's been fairly constant ownership in many of these institutions. And so unlike what's happened in larger corporations where there's been the development of a professional managerial class, these folks have lived in the area and they've always lived in the area. And so you can just, as Jordana has pointed out, you can really just illustrate that this could be a good deal for them, whether it would have community development impact or not, which is helpful. The one complication you should keep in mind is that some of the credit officers in these smaller banks will look at something that's receiving some kind of subsidy, some kind of assistance through a federal government program as problematic. If we're a going concern, it wouldn't need this subsidy. So there are always different points of view, and the smaller banks won't benefit from the experience and expertise of community development staff, like that as Jordana mentioned, that you see in the larger institutions. So you have to do a little acculturation, a little multicultural outreach, as it were, in terms of their point of view on how the economy functions with institutions like that.
And Mark, I'm curious, you may already have something you'd like to contribute, but I'd also just ask you to talk briefly about the role of new market tax credits in your project. And assume that this is something that we don't know very much about.
Well, and I may not be the one to talk about it, but I'll mention it briefly. We have a role for new market tax credits in our project, but that role has been delayed. We expected that revenue stream for financing last in the first quarter of this year, and the feds postponed their allocations until this month. So our new market tax credit efforts have been organized and promoted by a local banker in one of our communities who has really taken the lead on financing. We have a very complicated financing scheme. So I can't speak too much to new market tax credits, although the banker says it's a great and it's a great investment tool for these projects because there's a good return on it as far as the cost of that money. It's affordable to these projects, and that's important. You know as well as I do, Chris, that having your numbers add up correctly and having a project that makes sense financially and having support for that project and being able to show those people who you're asking to invest in your project that you have all of your ducks in a row and this makes sense is very important. So that process always has to happen, but we are encouraged because while we haven't really gone so much to the federal government for financing, we are getting some help through some USDA programs through an area rural electric cooperative who said this is good for their members and offered their help. Having multiple sources of financing to go to is very important, and this OCC ruling really, I think, opens up an important part of that for us.
And Jordana, I want to just give you a chance on new market tax credits before I ask another question. I know this is something that you were excited to talk about. Have we covered some of the key details, or is there something that you want to make sure what we take away as we're considering how new market tax credits fit into all of this?
Yeah. Well, I'm actually going to have a meeting with Treasury coming up in next week to talk about new market tax credit, because I have been involved in new market tax credit as a banker in my previous life, and as far as sourcing the deals, right? So a lot of financial institutions are qualified to use new market tax credits for community investments that revitalize a community and create jobs and so forth. And the Treasury has specifically now included broadband in it to be able to be used. And basically, it's a tool that is, like Mark said, it's long-term and affordable and attractive to both the co-op that you're working with or the entity that you're supporting and working with, as well as for the financial institution. So I can't give all the details that I probably will, be able to as I meet with Treasury, or bring in some of the bankers. When I was with a major national bank, I was working with our commercial banking arm to do new market tax credits, right? So they handled kind of the details that you're kind of talking about right now of it, but suffice to say for now, right, that it is a great tool in community development because of the long-term. The reason I think that we've included it as part of broadband investment is because you need those long-term investments that give people time to create the impact, right, that they're trying to have. So that's my limited experience, but what's incredible is that financial institutions that qualify to use new market tax credits will be very excited about this opportunity to invest in broadband infrastructure, and we're not going to have pretty much any trouble showing the impact because there is that patience and understanding that it's a long-term investment.
May I jump in briefly, Chris?
Please, just let me say to the audience that I encourage you to ask questions at any point, but I'm looking forward to hearing right now what Tim has to add.
I was just going to say new market tax credit financing is an excellent tool for using tax credits or providing tax credits to investors to assist in the financing of economic development activities in qualified communities. Again, the larger institutions find it much easier to participate in these, though there is a debt component, there's a construction financing component to many of these projects, which smaller banks will often participate in. But on the equity side, they're very complex and they require fairly legal advice that has a high degree of expertise in transactions like this, and lots of smaller community banks simply aren't going to have that in-house or access to it or the resources to pay for it. So just keep that in mind. There are many syndicators of new market tax credits, many nonprofit syndicators. You don't have to be a nonprofit entity to receive financing through a new market tax credit deal. To qualify, you can be a for-profit business, like a broadband network, of course, as Jordana and Mark have pointed out. I briefly lost my train of thought. And then, Chris, I also wanted to make a little comment on what Mark's been alluding to in terms of the the bank making an equity investment in that cooperative, but I'll wait until you tell me an appropriate time to do so.
Great. Let's come back to that in a second. I wanted to ask Mark specifically if you have any advice on dealing with, as a local government official, prior to being the head of the EDA, you were a city administrator, and you have a lot of experience in local government. And so I'm curious, for someone who might be just trying to strike up a conversation with a bank to find out if they're interested or how they might get interested, do you have any recommendations?
Well, there's two approaches. One, you just walk into your small town banker that you generally have a relationship in a small town, and you say, we have issues in our small town, because most small towns do, and let's take some steps to address those issues, and let's take some steps to change our future and make good things happen. And what I mean by that is the opportunity to build a fiber network and touch all of the metrics in a small town that are important: job creation, senior citizens, education, healthcare, all of that. So from my perspective, when you walk in and start that conversation, you talk in broad, general terms of what you can do for your rural communities. I think that's becoming more and more apparent. Pause here to say that whenever you put together a project, and it can't be said enough, it has to make sense. The numbers have to add up. You have to have support. From a specific standpoint, and you go in and you talk to your or becoming involved in a project, he's going to ask all of those questions that you're going to get from anybody who works in the finance. What kind of support do you have? What's the lay of the land for competition? Have you approached the competition, the incumbents, and asked them to participate, which we have done, and I encourage people to do that. This is an opportunity. These are tools to affect the future of your communities in a positive way. It's not an anti-phone or an anti-cable effort. It's a your community effort, and we need to keep that in mind. We need everybody to participate and work together to make these things, to make our communities better. And that's a kind of a broad statement, but it's a process of creating a coalition and a collaboration that has a vision and making it happen. And financing is incredible, the importance of all this.
Right. I want to ask Jordana about this. You have experience, I think, in larger community settings with larger banks. Do you have any advice for local governments that may be trying to strike up the conversation? And presumably this is not for a citywide network so much as a targeted investment that may have some more specific goals, I might imagine. But how would one go about setting up a conversation like this?
Yeah, so the publication that you're going to share with the people on the call is one way to start that conversation, because banks will, we're trying to get it out to all the financial institutions through our joint agency CRA roundtables. I just did one with Tim's colleague from the OCC and the FDIC in Las Cruces, New Mexico. We're going to have one in San Antonio, one in the border region, and likewise all the Federal Reserve banks, for example. We work with our interagency partners and do these CRA roundtables, and so we're trying to familiarize them. You too can play a part, right, by taking this publication into, by understanding it, of course, and taking it in so that they can see how it fits under the Community Reinvestment Act, and also helps, like I mentioned before, for example, the city of San Antonio, I'm working with them on their digital inclusion plan. That's part of their larger strategic economic plan for the development plan for the city. That document too is going to be very important, right? Because it shows how this financial institution can be part of this economic development. And we convened a group, and the local government were of the city of FAR and the school district, FAR San Juan Alamo School District, along with Anchor Institution, University of Texas, Rio Grande Valley. We came together, did an MOU, and decided we wanted to do this middle mile project, right, to invest in broadband infrastructure and then incentivize the last mile. And we have some partners that are ready to bring fiber to the home for low and moderate income communities there. And we've had already 2 major financial institutions step up and say, we want to play a role in all levels, from the broadband infrastructure to the digital inclusion programs that are going to help make this successful, right, and get adoption. And they see that makes good sense, business sense, right? One of them is a bank with the largest number of branches on the border, and they know, and you'll see the argument that I give in the document for how banking is changing. Everything is becoming digital, and there is really a promise for online banking or mobile banking to reach low-income people. It's just going to have to be a concerted effort between banks and local governments and the community to actually work with programs that are making their alternative financial services adoptable, right? Adopted and expanding and reaching low-income communities. So I would say, to answer your question briefly, that this document will help you to go in and strike up that conversation. If you have a local CRA officer, or if you want to contact me and I can connect you with those people, we can do that too. We have the OCC, the FDIC, and the Federal Reserve have people in a lot of communities because of the way we're structured around the country, and we can help you to strike up those conversations too. One of the things I'm doing, for example, in San Antonio, we had a CRA roundtable. I presented with Connect Home, the housing authority that's part of Connect Home, and that effort to bring broadband access and digital inclusion to housing authorities across the country. San Antonio is one of those sites. We presented together with them and Goodwill, who's doing the computer refurbishing and the training, and showed how those are great, worthy areas of investment, and there are types of needs in all the areas, from the broadband infrastructure for the last mile, particularly in San Antonio, to the digital inclusion training programs and how they fit in. So I would say that your first step is taking this document and using it as your talking points.
Great. So we have a couple of things on our to-do list here. I want to start. We are going to deal with a question from the audience about PWI. We have a comment that I want to see if Todd has anything else to contribute. But I want to start with Tim. Just if you can briefly fill in the gap for what you suggested. Now, when Mark has spoken about the benefits of the equity investment that a local bank made in their project, the impression I get is that it's that the money was nice, but the biggest deal was that it was a seal of approval. Now, you said there was some other things to that you wanted to make sure we covered. What do we need to know about an asset or about an equity investment in one of these networks?
So part of what Mark was referring to about the impact of this really commitment to make an investment that was undertaken by the First National Bank of Fairfax, Minnesota, is that this was the first time a community bank had used their public welfare investment authority to invest in a broadband network or express a commitment to do so. So the OCC, as it were, administers this exception to the National Banking Act. The FDIC and the Fed tend to follow the example of the OCC as the administrating agency.
So if I could just break in for a brief second, Tim. If I understand that correctly, basically what you're saying is that there's a variety of bank regulators, but they all tend to be on the same page with this.
Yeah, they will be. So if the OCC initiates a precedent, then the other agencies will tend to follow, though they may put their own slight spin on it, but they'll tend to follow. So this was great because there had been a larger national bank in Alaska, First National Bank of Alaska, who through a new markets tax credit deal supported a broadband Wi-Fi network in Alaska. So anyway, so that's what's important about what happened in southwestern Minnesota. But what lenders want to see is they want to see some kind of expression of local ownership, in an enterprise if they want to take on the risk, in this example of financing a startup. So that this bank stepped up and made an equity commitment, it secured the confidence of the lenders to pull the trigger on their commitments to lend. So even though it was a relatively small amount, it had a really large impact, and that's why the addition of broadband as an example of a qualified investment in the CRA, and then what we did with the Public Welfare Investment Authority are really so significant.
So I want to give the floor to Todd, who's someone who cares deeply about this and knows a lot more about it than most people. Todd, what did you want to offer?
Well, I think I'll offer a broader comment, which is that what I find really most fascinating about CRA is that it really is there's a sort of compact, a community compact embedded in it behind the policy, and it's that our financial institutions should be serving all sectors of society. And I think that whether our members are familiar with CRA per se or not, I think everybody really gets the idea of community development. And I think that, stepping back from some of the, some of the specifics, and CRA can certainly get, you can find yourself in the weeds fast. I think there's like a basic fundamental understanding that all of our members have, which is that, we're in Next Century Cities because we believe in connecting everybody, irrespective of their social stand. So I thought it might be helpful to take a little bit of a 30,000-foot view, and I think that that's something that perhaps our members can identify with.
Excellent. Let me leave the floor open for our panelists. I strongly encourage if anyone else has any questions to ask them. We still can dig in and make sure we draw this line with where the Public Welfare Investment Authority, how it's connected. But are there any comments that anyone wants to make at this point?
Yes, I got cut off a little bit. It's Jordana, but I'm back on it. I'm not sure if you all mentioned it, but when Tim and Mark worked on Public Welfare Investment Authority, that was before the new Q&As came out this July, at the end of July. So now there's developing a broader, understanding and this recognition that broadband is essential infrastructure because it is part of the new revised Q&As under essential infrastructure. Broadband is included, and some of the new Q&As around the effectiveness of retail banking services and providing alternative financial services. And in the publication, I give the how to show that you are being effective in reaching people. So just so that people know that all of this together is creating a big change in banking that we're trying to communicate as effectively as we can, and we're going to need partners throughout the community to share the how-to guide, the Closing the Digital Divide framework that we're going to send you all, and as well as all the agencies kind of working together to talk about the opportunity to invest in broadband networks, as well as the other legs of the stool of digital inclusion. So just so people kind of know the timeline of how this is rolling out.
Great. Do we have any follow-on comments from Mark or Tim?
I was going to say that just to follow up on a few things that Jordana and I've said. Though Jordana works for the Dallas Fed, and though I work for the OCC in the Midwest, it doesn't mean that we are not available for conversation and consultation on CRA and PWY and broadband with anybody from around the country. Part of that conversation may may involve our colleagues who work in those specific geographies, but they can certainly begin with us. And then the other thing I was going to say is that the OCC, all the regulators have publications, and that the OCC, we're working on one right now related to broadband, which really is following the lead of the Dallas Fed and Jordana's publication. And this is on, will be more directly focused on financing and banks. And so when that's, and you can always find OCC publications on at occ.gov. And to go back to the new markets tax credit piece, just very briefly, if you have any questions about low-income housing tax credits and new markets tax credits, or any of the what are called the community development financing tools, the OCC's publications are really excellent on these topics. They are either brief fact sheets or they're very detailed explanations thereof. So you can find your way through the dark forest of CRA fairly more readily if you consult some of these publications.
Yeah, that reminds me also, I just wanted to briefly note for people that Closing the Digital Divide, this publication that is from the Federal Reserve of Dallas that Jordana helped to create, it's remarkably well written also, just in terms of a concise summary of why broadband is very important, and also how banking is important to advancing the interests of everyone. So I strongly encourage you to read it, even if you're not sure how it might impact you, because I think there's some concise ideas that are well described. Mark, did you have anything you wanted to add before we do a couple of last questions?
No, Tim, I'm just listening and learning. Tim and Jordana are very helpful. And have you explained to people how they can get in touch with Tim and Jordana? Is it somewhere going to be on the slides and things?
Yes. So people will get an email who have either attended and or RSVP'd with more information, with the full slide deck that Tim shared with us, with a link to this publication and all that, as well as contact information. Now, I want to make sure that we fully cover this issue, because I know, Tim, you raised it. I've seen you give presentations, you focused on it. Now, a bank, could make investments in broadband in a city for whatever reason, but this Public Welfare Investment Authority is something that we really need to wrap our heads around, which is an incentive for the banks specifically to be investing in areas that may need more help than other areas. What do you want to make sure we know about the PWI and its relationship to CRA?
Okay, I'll do my best to be to be concise. Banks are restricted to make investments in the financial services industry, or I'll say national banks, in the financial services industry by the National Banking Act. There's one exception, and that is if an entity outside the financial services industry has a public welfare or a community development purpose, engages in that kind of activity, then an exception will be made to that law restricting what a bank can invest in. And we're only talking about investments, not loans or deposit service activity, just investments. So that enabling legislation is called the Public Welfare Investment Authority. And that is what underlies the ability of a bank to report an investment they undertook using that exception for CRA. So CRA consideration for an investment is made possible by the bank's ability to make that investment in the first place, which is enabled by this exception to the National Banking Act called the Public Welfare Investment Authority. So how does that go?
That is very helpful to the person who asked the question. I thought it was very clear. Jordana, did you want to add anything to that?
No, I think that was a good example of PWI. I will say that as we're working with financial institutions, we are actually learning a lot, and I'm creating a website for everyone to be able to use of the kinds of instruments, right, that banks can offer as we collect examples from the demonstration projects that we might be working with in our local communities for interim financing loans, or and all the examples of investing through grants and so forth. And then how banks are working with USDA and HUD in partnership, just like we do with Small Business Administration loans. Banks work with the SBA to make small business loans. We are going to be developing more and more tools in this area, and I think Tim and his colleagues too at the OCC are exploring just what kinds of specific examples of financial products and services can we develop that work for banks and work for communities in expanding broadband networks.
Great. I want to make sure that we touch on something that I believe we've already talked about today, and that's that we're not just talking about using these tools for building new networks or things that may produce money, but you can also use these tools for digital inclusion projects and those sorts of things.
Yeah, and that's real important under CRA because that is showing innovation. Because when you not only finance through an investment or a loan, a broadband infrastructure, you're showing that you care about the adoption piece, right? You care that they have the customers, right? If it's a co-op, for example, because you're going to be working with a community-based organization or a local government or school district on the actual adoption piece with parents and kids, or the community, right? So that looks really good under CRA, and it's a very important part of innovation. We look at responsiveness to the community, right? That you're working with people who have a plan for the economic development of the region, and you're well informed about we call it the assessment area or the performance context, right? So those are all real important under CRA, innovation, responsiveness, and leadership. So the leadership that bank that Tim worked with showed was very important, right? They took the lead with the authority of the OCC in this effort. So all of that is what banks are looking for, and what the regulators are looking for as they evaluate banks under CRA.
Great. And
may I ask a question, Chris?
You can ask a quick one.
So I believe one thing is that in the CRA we're talking about infrastructure. I don't know if it will be interpreted as activity restricted to financing infrastructure or not. But
it is
I
not.
think yeah, and I think you're right, Jordan, because there is another Q&A that says these examples are not limited. There can be more examples. But the only reason why I bring that up is that depending on how examiners might interpret, and that may influence what a bank does, in rural areas it's more of an issue of infrastructure and access. But from what I understand, in many urban areas, the greater issue is adoption, that the infrastructure might be there. It's just encouraging low and moderate income people, the elderly, minorities to take advantage of available broadband services.
Yeah, so like in a city like San Antonio, that's exactly the challenge. It is some of the last mile effort. Or we're looking at different solutions, and then as we are Google Fiber City, so meeting that gap. So they're investing in the infrastructure, but we're going to need to make sure low and moderate income communities are included. So there is some of the infrastructure part, right, the last mile infrastructure. But you're right, yeah. Adoption is key, and digital inclusion programs. It's all about. They're all about that. The new Q&A about alternative service providers under the service test. And if you're working, like many of the digital inclusion programs, the ones that we have here, are working on workforce development, key areas of CRA, financial literacy, using remote financial services. If a bank is working closely with them, they're going to be able to show impact. So the new Q&A says, yes, if you're working in providing alternative financial services, you just need to show impact. That's why I try to guide them in the publication to work with community partners that have a plan so that they can show results, right? So
yeah,
indeed.
Sorry, we're very much out of time. And so I just want to. I think that it is very interesting, and I think it's a sign that people that are interested in this should very much take you up on your offer to offer some specific individualized discussion, because that may be more useful than trying to cover all this generally. I wanted to note that oh man, I've lost it, but I want to turn it back over to either Todd or Deb, whoever would like to close it out. Yeah, it wasn't that important. So, but this was very helpful. So thank you, panelists. Now I'll let Todd close the discussion out.
All right. Well, thank you everyone for joining our call today. I'm always delighted to have NCC a part of conversations such as this one. I think it was a robust one, and I hope that we all found it helpful. There's just so many opportunities for connecting our communities using CRA. So thanks, Chris, Mark, Jordana, for an exciting dialogue on Community Reinvestment Act opportunities. And we'll be on the lookout for a link to our recording of this later and follow-up resources. Thank you.
Bye, everyone.
Thank you.
Thank you.
Bye.